Are the markets set to rally? Are we looking at something just emerging that could push the markets much, much higher? In this video, we'll examine that and all of the information you need to know, not only from a technical level, but from an emotional level, because don't forget, trading and investing is an emotional sport as well as a knowledge-based technical one. Let's run the numbers. Going through the news today, the S&P 500 posted its biggest first quarter gain since 2019. And according to Citigroup financial strategists, there's more room ahead for positive upside. If you were trying to buy the dip in the last trading session and you were out of cash, you weren't alone. Across Twitter/X, the sentiment was prices were going down and people were feeling the burn. Fed Chairman Jerome Powell spoke at the Stanford Graduate School of Business. The Stanford Graduate School of Business. Let's listen to the key points that he had to say.
On inflation, it is too soon to say whether the recent readings represent more than just a bump. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence that inflation is moving sustainably down toward 2%. Given the strength of the economy and progress on inflation so far, we have time to let the incoming data guide our decisions on policy. Recent readings on both job gains and inflation have come in higher than expected. The economy added in an average of 265,000 jobs per month in the 3 years through February, a faster pace than we have seen since last June. And the higher inflation data over January and February were above the low readings in the second half of last year. But these recent data do not, however, materially change the overall picture, which continues to be one of solid growth, a strong but rebalancing labor market, and inflation moving down toward 2% on a sometimes bumpy path.
If you're wondering what that actually means, it just means no rate cuts for you. They'll be along, but not just right now. But later, he also highlighted the problem and the danger of moving too late. Now, what did this do to the DXY and to yields? The key to note is the financial markets are really complex, and because they're complex, it's not just one thing that will cause things to move around. We saw recently that the ISM Services PMI came out lower than forecast. This was a bit of a problem and caused the DXY to sell down. When Jerome Powell was having his chat, you can see that the DXY just actually flatlined with some weakness. But what we need to understand is where are the structural levels underneath this. And the good news is the DXY has been released into the service. Let's just pop on that indicator and let's go diving into the charts. It's always helpful to help you to understand how to read these structural levels. Thicker is stronger, thinner is weaker, and more clustered means stronger. What we saw was the DXY coming up into this 104, 8,000 area, just this area here. It just couldn't get above it. Now, when it started to weaken and cut under, there was literally not much support in there. So when the ISM Services PMI came out unexpectedly weaker, what did that do? It meant that the DXY needed a lot of safety nets, strong safety nets to capture its price action. And then Jerome Powell came out and said, rates higher for longer, but at the same time, we don't want to mess it up. And what have we seen? We've seen a material weakness in the DXY. Now, if you're in crypto, stocks, or commodities, you may look at Forex and say, I don't do Forex. I don't care about this stuff. And I especially don't care about the bond market. Wow, that's just for old people. Having been inside financial markets for nearly 40 years, wow, I'm showing my age, you really need to look across a lot of charts to understand what's happening inside the crypto market if you're only in crypto, or in the stock market if you're only in the stock market. Or if you're in commodities, you still need to look at everything. It's always the same. When the DXY is coming up, that is really, really bad for crypto. Crypto and the DXY typically have an inverted relationship with each other. There's a lot of economic uncertainty at the current time. That's why gold is going crazy. But what we'll find if the yields come down and the DXY continues to come down, we would expect risk-on assets to come up. And look at the Nasdaq and Bitcoin. Look at how closely they're following each other in directional terms. There's a degree of material weakness in the crypto market at the current time. People are worried that the US government is going to sell 10,000 Bitcoin, which is worth about $2 billion, but $1.6 billion of Bitcoin was bought by ETFs last week. Also, the halving is near. It's just literally a couple of weeks away. Another thing to consider, we've seen a big drop-off in Fed liquidity, and when this has happened in the past, it's led to just corrections inside markets. And when this happens, there's actually a lot of buying opportunities, and we tend to come out on the other side with a rally. There is no question at all that Bitcoin is going up. It will continue to go up and up and up. Please watch the video from about 3 days ago where I went through the historical aspects of Bitcoin. Bitcoin is the absolute best asset class that you could ever be involved with. Keeping your eye on the dollar and dollar-denominated pairs is a really good idea. We've seen the Dixie just come down. Look at that. It's plummeting. The euro dollar, the fiber, is coming up. The Aussie dollar is coming up. The Kiwi, the cable, they're all just partying. Meanwhile, the loonie is going loony, going to the loony bin because it's really going down. And the gopher is also coming down, dollar yen. What we're looking at specifically is this one. When the DXY does this, comes down like this, we would expect crypto to go ballistic. Ballistically up, that is. When looking at the crypto market, the ascent of the DXY has put a lot of negative price momentum into the crypto market. The crypto market is also gearing up for a bit of fun with Gary Gensler from the SEC. Please keep this on your radar as well. But one thing that we know, if Bitcoin comes down, what is going to happen with the alts? They're going to follow Bitcoin's gravity. What is Bitcoin's gravity? That's that blue line right there. You can see it playing out on ADA, Cardano. What about Solana? You can see Bitcoin's gravity happening here. What about Dogecoin? Yep, even the memes can't escape Bitcoin's gravity. What about AVAX? You got it. What about Ethereum? When you understand this fundamental, you need to understand how to look and interpret Bitcoin's gravitational pull. So let's look at the Bitcoin chart, which was released into the service. When looking at Bitcoin like this, it's really hard to understand where is structural support and where is structural resistance. That's why we have the indicator, which is marked up with level 1 and level 2 standard certification. Popping this on gives us an incredible insight into where smart money is buying and selling. We can see that smart money was outselling just above 66,800, and there were a lot of sell levels there, so it's not surprising to us at all that Bitcoin couldn't get through this level. If it can't get through this level, where's it going? It's going to the level below. The level below is slightly above 65,140. Now we've also seen that the DXY is starting to decay and starting to decay precipitously. It's really coming down. What does that mean? Because Bitcoin is denominated in USD, it means, the chart is that we're looking at, it means that that denomination will push Bitcoin's price up, just saving any external event which is localized to the crypto market. I'd also suggest that you look at total crypto market cap, because when you understand total crypto market cap and especially read it in conjunction with the structural levels on Bitcoin, what you're going to see is just the mask getting removed from crypto price movement. So let's pop on the indicator. Now the indicator marks up nearly 4,000 days of data with total. Okay, let's pop it on and see what's cooking. Total crypto market cap has been selling down with Bitcoin, but you'll also notice that the structural levels have been hit and obeyed consistently, just around that $2.371 trillion mark. These act as safety nets, not brick walls, so it is possible to go below them, but we're seeing a lot of force around that 2.371 trillion. What does that actually mean? If we come back into this level, we would expect the buyers will just step in and push it higher, especially since the DXY is decaying at the current time. Keep your eye on the DXY chart. The DXY is known to go all over the place. When people are first starting off with investing and trading, they tend to only look at the chart that they're putting money into. This is very common, and it's a very common mistake, and one that you want to get rid of as soon as you can. Because the chart that you're trading and investing in is always influenced by other charts. Here we're looking at the S&P 500, and here is Bitcoin. What do we notice as the S&P 500 is going down? What's Bitcoin doing? It's going down. Bitcoin is the blue line. And as the S&P 500 was coming up, what did Bitcoin do? It came up. But when the S&P 500 came down, what did Bitcoin do? Oh, this is pretty interesting stuff. You can see that we're getting a lot of coordination between the major market indices and Bitcoin. And you know the gravitational pull of Bitcoin on what you're trading and investing in as far as the alts are concerned. So please make sure that you know the structural levels on the S&P 500 as well as the DXY. But Ken, that sounds like so much hard work. I just want to put money in randomly to anything, especially things that people talk about on X or Twitter, on YouTube, and I'll put my life savings into them. Financial analysts often say that people spend more time planning their holiday than planning their trades or investments. Please don't be like this. It's your hard-earned money. You have to manage it. So let's have a look at the structural levels on the S&P 500, which has been trading for in excess of 55,000 days. Let's pop it on. The key for us is to always look more broadly than what other people do. We can see now the story of the S&P 500 more clearly. There was structural resistance, and don't forget, this is like literally 56,000 days worth of analysis of data. There was structural resistance at this specific level, just above 52.02. When we got through it, we were heading up to the structural level around that 52.32 mark, but we couldn't make it. And as we couldn't make it, we put in a series of lower highs. This is a high, this is also a high, but this high was higher than that high. That means that this high is a lower high, if you get what I mean. That just shows that the structural strength of this resistance line was too great for the S&P 500 to overcome. So as it sold down, where was it going? You got it. It was going to a structural level. It's so simple to understand when you have the X-ray vision. We know that the DXY is currently under levels of structural resistance, and quite a few of them. There's also a bit of a negative fresh air gap, so the DXY could decay really substantially, way more than it's done already. It is likely to come back and to retest this underside, to confirm it as resistance and then to sell off. So it doesn't mean necessarily that we're going to see an instant rally across crypto. We could see a bit of a dip followed by a big surge. That is under the condition that the DXY comes up, retests, and then just decays, because there's literally nothing keeping it here. And when we pass through this particular level, that's about the last line of resistance as far as retail traders will be concerned. So just look at this from this stance. We may get a wholesale decay inside the DXY, but it's likely to come up and either retest this one or retest that one on the way back. Of course, we always have another option. The price could just go like this. It could just consolidate. So we need to keep that on the board, or the DXY could rally up. But the probability is for a decay, not for a rally at the current time. When people first get into trading and investing, they think that they must buy every bottom and sell every top. This is impossible to do. As you go through many decades, you realize that you just want to sell the sweet spots inside the market. You don't have to time the top, and you don't have to time the bottom. This means that through that process, you've learned a lot, and you have to have a lot of patience and humility to understand that if things are going against you, that's just the nature of a wave-based function. Price is always moving in a wave. When it comes to Bitcoin and crypto, these waves can be brutal. We're talking 30 to 40% down. That's why you must always be kind to yourself. Maintain your inner peace and your outer peace. And that's not an easy thing to do in crypto if you are ill-prepared or unprepared. It's absolutely no mistake that you're in the crypto market, and no mistake that you've tuned in and watched us, because we're all about not just financial success, but real success. And real success is always how you feel, not what you have. Always remember, abundance is a natural thing. When we talk about lack and limitation, that's just a human thing. Everywhere you look in nature, it's always abundant, so you want to have that abundance mindset. I would also suggest to focus on your learning. Your learning is incredibly important. That will take persistence and commitment, and persistence and commitment are what we're all about as a community and a global family. And I want to thank you for being here and sharing this time together. It's really meaningful to Kate and myself. The crypto market can play with your emotions, so just see that you can do your daily positive affirmations for abundance, financial success, and happiness. Focus primarily on your learning and say to yourself, I win or learn, and never blame. When you blame, you externalize the cause of the problem. The cause of the problem is always internal. Only you can buy and only you can sell. This is the way, and this is the reality, and something that we just all have to accept. So either win or learn. If you're learning, you're just paying the tuition fee of the markets. The key is to keep your lesson costs small and just learn as quickly as you possibly can. How do you do that? By remaining dedicated and committed and solving your problems with positive excellence. Always understanding that you're already worthy. Just know that opportunities in life reset daily. It doesn't matter what happened yesterday, and you don't need to have shell shock over what happened months and months ago, or even years ago. You've got this. You can do really, really well. And why do I say that? Because you're here, and also the universe wants you to succeed. And not only that, you want to succeed as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.